2026 just got started. Great time to start banking on Bitcoin if you haven't before. In this video, I'm going to show you borrow and lending protocols. This is one of the two types of protocols you should know in order to start doing this banking on Bitcoin, growing your Bitcoin bag. If you've been in crypto for a while, tired of losing money, this might be the solution for you. If you are trading and losing, then stop it. I mean, most of the people in trading lose money. 80 something percent at least will lose money. Maybe trading is not for you. I know trading is not for me. That's why I like more this passive approach. And the beauty about all of these protocols, borrow and lending protocols, is that they are 100% passive. You can grow your Bitcoin over time, and I don't have to look at the screen 24/7. I can deploy and leave this on autopilot, earning me yield. This is not magic internet money. Let me show you what I mean by that. So this is DeFi Llama. DeFi Llama tracks everything that happens on chain. Fees paid in the past 24 hours. These are the leading protocols when it comes to fees generated. $60 million worth of fees were paid. Many of these to people in Aave. There's other protocols generating money here. There's Hyperliquid, that's for traders, right? There's Jupiter. This has borrowing and lending as well, but Jupiter is a DEX aggregator. We have a couple different DEXs here. Decentralized exchanges. We have Uniswap, the biggest. We have Meteora, we have Pump.fun. There's only two protocols that you need to understand to bank on Bitcoin. One of them are decentralized exchanges by becoming a liquidity provider. I showed you how to do that in other videos, which I will link at the end of this one. And then the other types of protocols are borrow and lending protocols. Aave is the biggest example. I also did videos before showing you how to work with Aave, and actually by putting together a strategy that involves Aave and liquidity pools, allowing us to just maneuver our capital, increase our yield, and adjust when prices, Bitcoin market prices do adjust, because volatility is the name of the game in crypto, okay? And you just have to be comfortable with that, especially if you're banking on Bitcoin. But in any case, in this video, I'm going to focus on borrow and lending protocols. Aave is one I did a number of videos already, but there are more. And in fact, although Aave is the leading one, $35 billion locked in TVL, although it's the leading one, there's going to be others that might be better suiting for you. And that's the focus of this video, show you how you can use multiple different ones to get the best yield when banking on Bitcoin. And of course, if you are bullish on Ethereum, some other different cryptocurrency, you can apply the same things that I'm telling you. Swap Bitcoin for whatever token you want to hold in the long term and apply that, okay? So Aave is great. It is battle tested. It's the leading for a reason. People have a lot of trust in it, okay? And that shows in the amount of money that they have locked in. But Aave doesn't give us all that good opportunities when it comes to banking on Bitcoin. Although it's possible, yeah, I showed you in past videos. But let me show you what I mean by that. So markets are basically blockchains. You can provide your capital as liquidity here in a number of markets, okay? You deposit there, people come and borrow the capital that other users deposit, and you will earn this APY because of that, all right? So on the BNB smart chain, this is the BNB market. You see BTCB, which is the tokenized version of Bitcoin that is most popular on the BNB market. We have a really tiny supply APY, lower than 0.01%. It's not all that good, okay? But maybe you want a better yield. Of course you do, we all do. So let's switch the market. Let's go on Ethereum mainnet. Here what we have as Bitcoin tokenized versions. We have Wrap Bitcoin and we have CBBTC. Still the same really tiny yield, less than 0.01%. And actually I've been looking at all these markets. Mostly you'll find these very tiny yields. Although on base, that's where Aave does offer the best deal. You deploy CBBTC here, you get 0.06%, already over 6 times what we are yielding on other networks. Of course, you can always send your funds from BNB or Ethereum to Base, turn them into CBBTC, and earn this yield on Aave. That's one option. Another option is to go and search for other reputable borrowing and lending protocols. Aave is the leading, but it's not the only one. So for example, let me show you the dashboard here. I have some BTCB deployed here on the BNB smart chain, and I could withdraw all of this and move it to a much better option on the BNB Smart Chain, and that option would be Venus. BTCB core pool here, current APY 0.1%. So that's already better than whatever Aave offered us for CBBTC on Base. So for me, it makes much more sense to withdraw my capital from Aave and do my business here. Much more rewarding, okay? So Venus is also a great protocol. Let me go back here on DeFi Llama. We're looking at all the protocols, but let me go here on lending just to show you. So where is Venus? The 8th ranking protocol here, 1.6 billion. That's the TVL on Venus. Great place to deploy your Bitcoin, tokenized version of Bitcoin, on the BNB Smart Chain. If you are, for example, let's say on Solana, Kamino is going to be a good choice. 2.2 billion here, and also Jupiter land, which is more recent. So in theory, the smart contracts on Kamino, they are more battle hardy. They have been operating for a longer period of time, and in crypto, in DeFi, the proof of the pudding is if the contracts, the smart contracts, the platforms stand the test of time without any major issues, then we're rolling. And that's the main difference between Jupiter and Kamino. Jupiter, that being said, is also a very reputable platform. I wouldn't shy away from it. I don't shy away from it as well. So we can go there to Jupiter land. If I want to borrow, I'll need to supply first, of course, but if I want to deposit Bitcoin here, LBTC and CBBTC has supply APY of 0, but with LBTC we get 0.4% supply APY. Really good stuff when it comes to Bitcoin, okay? Other options are, let's talk about Base now. For example, on Base, I know Moonwell is a good option. Here it is, 36th leading borrowing lending protocol in DeFi overall. Moonwell is a good one, and I also like Ether.fi, which I believe it's the 20th. Yeah, here it is, Ether.fi borrowing market. On Base, both of these are great options. Let me show you. So this is Ether.fi Stake. This is the most basic option for you to deploy your Bitcoin there. And there's a couple of differences here on Ether.fi. The best markets or the networks that you should use are Ethereum Base, Arbitrum, although you can also use Corn, Bearchain, and Scroll. In any case, you can deploy your Bitcoin in any of those. So if you come here, you will earn a 0.4% APY, and Ether.fi also offers a lot of other juicy things. For example, they have a cash card, which I showed you in other videos of mine. Cash card in Ether.fi, it's one of the best when it comes to rewards. At some point in time, I was earning during December 10% cashback for a limited period of time. Also before that, I was getting 3% cashback on Ether.fi. They have really good promos if you want to use their cash card. Great stuff overall, Ether.fi as a platform, but I'm getting a little bit sidetracked here. So this is the basic staking here. You can deploy CBBTC, LBTC, and wrapped Bitcoin, and also you get eBTC. This is backed by Ether.fi, of course. It's sort of a liquid staking token. You deposit Bitcoin and you remain with your capital liquid in the ship of eBTC. So your capital is not locked in as it happens with most other borrowing lending protocols, although it will earn you yield as soon as you deposit, all right? Then they have some vaults. Vaults are a bit more advanced DeFi strategies, but they're completely passive as well, although there's more risk, all right? So there's going to be more and more layers of smart contract risks because they're taking your Bitcoin and deploying into a basket of yield opportunities. And you see, that's also why the APY here, it's almost 3%, which is not easy to find. Bitcoin yielding you single digits APY, it's really rare, although with more risk, as usually higher risk comes with higher reward in DeFi. But if you want to keep it simple, and let's call it also safer, just go with staking. 0.4% a year, your Bitcoin remains liquid. Good option as well with Ether.fi. Now let's swap up to Moonwell. So Moonwell operates only on Base. Actually, not only on Base. Base is the biggest market they have, but they also operate on OP mainnet and I think Moonbeam. Yeah, here it is, Moonbeam. Maybe also, yeah, Moonriver, but mainly on Base and OP, especially on Base. And let me sort this out once again. You deploy CBBTC here, 0.2% borrow APY. Compared with Aave, this is much higher. And if you go here with LBTC, you get even higher than this. You get 0.3%. It's mostly going to depend. You see CBBTC, 0.5%. Great stuff as well here, although you're limited to the number of markets. So you see this is on Base, OP, Moonbeam, and Moonriver. And the better deals will likely be on Base or OP. In any case, it's up to you. Another very reputable, trustworthy So far so good, knock on wood, but they've been doing a good job. They also have their own crypto card. I didn't look too much into it, and I think there's better options, but let's not get sidetracked here. Essentially, that's it, guys. This is the main protocols I wanted to share with you. There's going to be others if you are on Suiland. Here it is. Navi as well. But essentially, all of these protocols work the same way. You deposit collateral, you borrow against it. It's completely optional if you want to borrow against it. But to wrap up the video, let me just talk a little bit about Health Factor, because I have some Bitcoin here, which I will move elsewhere. As we saw, there's going to be better options on the BNB network, right? But let's hit risk details. So whenever you borrow against your collateral, the higher you borrow, the higher the risk, and the closer you will be to liquidation value. I try not to have my current LTV, loan to value ratio, above 40%, and I'm already pushing it if I'm at 40%, because even if you're talking about Bitcoin, banking on Bitcoin, and Bitcoin being the strongest currency in crypto definitely and arguably ever created, even considering all of that, there's always going to be volatility in the markets, and Wall Street is in the game. We want to play it safe, so keep some Bitcoin on the side on your wallet if needed be, because if this drops, if the price drops, this goes lower to 1 and this gets closer to the liquidation threshold, you want to have more Bitcoin to deploy and keep your health factor in check, or you can at any point in time repay your debt. But it's going to be faster if you just come here and deposit more Bitcoin. It's going to be much faster to do that and to act according to what markets are doing, all right? Whatever platform you are using, this is what you need to know about Health Factor. Do not push it, like I said, because if you start having too high of a loan, your health factor goes down, your LTV goes up, and you are essentially already increasing your leverage. Leverage is not only on trading. If you're doing this, you are already playing with leverage, and you want to avoid that because, like I said, Wall Street is in the game. Bitcoin price is heavily manipulated, so have that in mind. You don't want to be hit by a sudden swing of 50% in the price. Right now Bitcoin is rallying up once again. It's getting closer to 95k. I told you I don't think we're in a bear market. So in any case, let's go back to 3 months. So this is it, liquidation event. I keep referring this was the last big one. Market manipulation for sure. October the 10th, 10 billion liquidity wiped out from the markets because people who are leveraging in trading and also in borrow and lending protocols, they just got wiped out. You don't want that to happen, so play it safe. Don't push your loans too much. Yeah, we're talking about Bitcoin, but always have in mind that the markets are and will be manipulated from here on, so have that in mind. But essentially, this is the way you can start banking on Bitcoin, extremely beginner friendly, generating some real yield. You just deposit and that's it. If you want to borrow against it, completely optional, but it's up to you. You can earn really nice yields in other DeFi opportunities, liquidity pools, for example. And if you play these protocols at the same time that you are using liquidity pools, you can put up a really interesting money-making machine, passive income-making machine, powered by DeFi, crypto. And that's the whole point of banking on Bitcoin, in my opinion. Keeping it simple, earning passive income while not having to look at the screen 24/7, worrying about markets all that much. Actually, it's market volatility that can bring us yield if we are using liquidity pools, as I showed you in other videos. I will link up multiple different videos relating to this topic, but now you know reputable protocols that you can use in multiple networks for you to deploy your capital in the shape of Bitcoin, earn some yield, borrow against it if needed. Extremely beginner friendly, guys. So if you are a complete beginner, start testing it out. Don't deploy your whole liquidity in one go. Don't start with 100k if you never did this before. Start with $20, a couple $100, and go from there. If you have any questions, let me know in the comments, okay? That being said, if you took value from the video, like and subscribe for more. Maybe share with someone who is also interested in this. Tired of getting wrecked in crazy trades, sketchy pre-sales, trying to find the next alt or meme. This is going to be much more passive. If that's your style, give it a go, give it a try. That being said, guys, thanks for watching. Take care, keep exploring crypto, and I'll see you on the next one.